This is your financial news update. We're going to take a look at the uninversion of the 10-year versus the 3-month Treasury rate. The Federal Reserve uses this information to calculate the probability of a recession. Let's take a look at the chart. The gray bars represent recessions. The last major recession we had was in 2007. On the chart, you'll see right here the zero. This is the baseline. And you can see right here where the inversion occurred, when it went below zero. And you can see when it uninverts, you see when it goes back up above the zero, the recession happens shortly after that. And it's happened like that every time throughout history. There was one time that it didn't. So you can see right here, the inversion starts, and then it uninverts, and then there's the recession. And again, right here it inverts, and then it uninverts, and then the recession happens. This is the cycle of the market, the ups and downs. The Federal Reserve, with their monetary tools, tries to smooth this cycle out. But you can see right here from the Great Recession of 2007, it's been a long time since we've had a downturn. A very minor one right here in 2020, but you can see the inversion is pretty deep this time. But once it crosses this line, that's when a recession can occur. If we go over to this chart, you can see it a little more granular, and it's starting to get back up towards the baseline. The bottom chart down here is interesting. If you move the cursor to one of the points, it gives you a probability. Right here it's 70.85% that there's going to be a recession. And as the inversion gets further away from the baseline, the percentage of a recession goes down. Currently, the Federal Reserve says we're at 61.79% chance to have a recession in the next 12 months. I'll include a link at the end of this video to a video that talks about the interest rates and how they can influence recessions. In 2007, here's the recession, the bar. The Federal Reserve raised the Fed's fund rate, which influences the interest rate, to 5.5% and held it for a year. And then they started cutting rates into the recession. And you can see where we're at right now. They did the same thing. They raised it to 5.5 and they've held it for a year. And now they've already cut it 50 basis points. So they're already starting to cut. More indicators are adding up that we're getting ready to head into a recession. If you have any questions or comments, please leave them below.